Something is happening with Shiba Inu that whales have already acted on. The signal is subtle, but the implications are massive. If you're waiting for confirmation, you might already be too late. The momentum is shifting and the capital is moving to places you might not expect. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. As we enter the first day of February 2026, the cryptocurrency landscape is undergoing a significant transformation. The euphoria that characterized the early weeks of the year has begun to settle, replaced by a more calculated and clinical approach from major market participants. For Shiba Inu, the journey through January was a roller coaster of emotions. We saw a sharp 30% rally in the opening week, fueled by renewed institutional interest and a broader market recovery. However, as the weeks progressed, the narrative started to change. According to reports, while the asset opened the year with a rebound, the sustainability of this move is now being called into question. The broader market sentiment has shifted from blind accumulation to selective positioning. We are seeing a resurgence in decentralized finance and real-world asset tokenization, which is drawing liquidity away from traditional meme-based assets. The market mood is currently one of cautious observation. Investors are no longer satisfied with just community hype. They are looking for tangible utility and sustainable growth models. This shift in investor psychology is particularly evident in the way capital is being rotated out of established tokens and into emerging protocols that offer fresh narratives for the 2026 cycle. The transition from a speculative-driven market to a utility-driven one is creating a challenging environment for legacy assets that rely heavily on social sentiment. Analysts observe that the meme premium is slowly eroding as participants demand more robust economic structures and clear roadmaps for ecosystem expansion. This macro shift is not just affecting Shiba Inu, but is a broader trend across the entire digital asset space as we move deeper into the first quarter of the year. The core development we are tracking today is the clear divergence between Shiba Inu price action and its underlying on-chain activity. While the community remains vocal, the actual market momentum is stalling. As per recent analysis, Shiba Inu has fallen by nearly 5% over the last 24 hours, underperforming the broader market. This decline is not just a random fluctuation, it represents a breach of critical support levels that had held firm throughout late January. The main event here is the visible migration of both retail and whale interest toward new, high-utility tokens. Specifically, a significant amount of liquidity is flowing into projects like Mutuum Finance. According to reports, this new protocol has already raised over $20 million, attracting over 19,000 investors in its early stages. This shift suggests that the smart money is looking for the next big opportunity rather than waiting for Shiba Inu to reclaim its former glory. The narrative of Shiba Inu as the primary gateway for retail investors is being challenged by these newer, more specialized platforms that promise decentralized yield and advanced financial tools. This migration of capital is a clear signal that the market is prioritizing innovation and early-stage growth over established but stagnant ecosystems. The emergence of these new protocols is creating a supply shock of a different kind. A shock to the demand side of legacy tokens as investors reallocate their portfolios to capture the potential of the next generation of decentralized finance. When we look at the hard numbers, the data tells a compelling story of a market in transition. Currently, Shiba Inu is trading at approximately 680 units, having slipped from its recent resistance near 800 units. This represents a significant cooling off from the mid-January highs. On-chain metrics provide further evidence of this shift. According to data, whale selling has intensified over the past 72 hours. Large-scale holders who were previously accumulating are now distributing their holdings into the market. Interestingly, while the price is struggling, the burn rate has seen some extraordinary spikes. As per Shib data, the burn rate recently rocketed by 500%, with millions of tokens being permanently removed from circulation. However, even this massive reduction in supply has not been enough to offset the selling pressure from whales. The exchange inflow data also shows a steady stream of Shiba Inu moving onto trading platforms, which typically precedes further selling pressure. In contrast, the volume for new tokens like Mutuum Finance is surging, with over 800 million tokens already sold out in its initial phases. According to reports, these figures highlight a stark reality. The deflationary mechanics of Shiba Inu are currently being overwhelmed by the sheer volume of capital rotation. The data suggests that for every token burned, several more are being moved to exchanges for potential liquidation, creating a persistent overhead resistance that is difficult for the bulls to overcome in the current environment. The interpretation of these movements suggests that we are witnessing a maturity phase for Shiba Inu. The asset is no longer the speculative wildcard it once was. It has become a staple of the market, which ironically makes it less attractive for those seeking exponential short-term gains. The shift toward Mutuum Finance and other DeFi protocols indicates that investors are prioritizing yield over hype. As per expert commentary, the current price action is a classic example of capital rotation. The whales are not necessarily abandoning Shiba Inu forever, but they are certainly rebalancing their portfolios to capture the growth of the 2026 DeFi resurgence. The fact that Shiba Inu is losing momentum while its burn rate increases suggests that the market is currently driven more by macro liquidity trends than by internal supply dynamics. For the price to truly recover, it needs more than just token burns. It needs a new, compelling reason for whales to stop selling and start buying again. Without a fresh catalyst, the asset risks entering a prolonged period of consolidation or further decline as liquidity continues to bleed into newer, more exciting sectors of the crypto economy. This analysis points to a broader structural change in how meme-based assets are valued. The market is moving away from pure social sentiment and toward a model where utility and on-chain activity are the primary drivers of long-term value. For Shiba Inu to remain relevant in this new era, its ecosystem must evolve beyond its current state and offer more than just deflationary mechanics to its holders. Looking ahead to the next few weeks, the outlook for Shiba Inu remains balanced but leans toward further volatility. In the short term, we expect the price to test a 650 unit support level. If this level fails to hold, a further slide towards 600 units is highly probable as bearish momentum intensifies. On the bullish side, if the broader market sees a sudden influx of liquidity, Shiba Inu could attempt a relief rally back toward the 750 unit mark. However, this would likely face heavy resistance from whales looking to exit at higher prices. The next 14 to 28 days will be critical in determining whether Shiba Inu can stabilize or if the shift toward new tokens will become a permanent trend for the first quarter of 2026. The key factor to watch will be the volume of exchange outflows. If we see tokens moving back into private wallets, it could signal the end of the current selling phase. But for now, the data suggests caution is warranted. The interplay between institutional distribution and retail exhaustion will likely dictate the price trajectory for the remainder of the month. We want to hear from you on this. With the rise of new high utility tokens, do you think Shiba Inu can maintain its position in the top tier of the market? Where do you see the price heading by the end of February? Are you holding firm or diversifying? The market is moving fast, and staying ahead of the whales is the only way to survive in 2026. We will continue to monitor these on-chain shifts and bring you the data as it breaks. If you found this analysis helpful, make sure to subscribe and turn on notifications. Until next time, stay informed and trade smart.